Yeah, I'm Ray from IO3 Ventures. We are doing investment in a lot of active investment in eigenlayer and risk-taking ecosystem. Today we have different guests from Puffer, from Renzo, from Outlayer, and Binance Labs. To start with, you guys can give a brief intros and what's your main focus, research or product building? Yeah, Alex, you can start first.
Hi, everyone. It's a pleasure to be on this panel. Thanks a lot, Ray, for hosting and moderating. I'm Alex from Binance Labs. We are an investment fund closely backed by Binance. We started in 2018, and since then we've invested in over 300 projects across pretty much any vertical in crypto, starting from base layer infrastructure all the way to the application layer. I focus mostly on DeFi and some infrastructure, hence why I guess I'm on this panel as well, and happy to hear more insights and share how we're thinking about things. We usually try to back founders as early as possible, pre-seed and seed. And actually, we've backed all of the 3 founders and projects on this panel. So we're an investor in Outlayer, in Puffer, and Renzo. Yeah, great to be on the panel with you guys.
Hi, my name is Amrit. Can you hear me? It's okay. Hi, my name is Amrit. I handle operations at Outlayer. At Outlayer, we started off as a RaaS service with the goal that we would make it easier for people to deploy rollups. So you would come to us and you say which stack, which DA layer, which shared sequencer you want, and we would spin up that instance for you so that you can go to market quite quickly. Recently, we have been working very closely with Eigenlayer and the team on deploying this idea of restake rollups, where you would bring restaking to rollups to offer or enhance decentralization, security, and faster finality to rollups.
Hi, I'm here from Puffer. We're the first permissionless liquid restaking platform. Asking about what our focuses, our values are. Our focus is we're focusing on 3 things. One is ethos alignment. The other one is being research focused, and the last one, improving user experience through enhancement of infrastructure. One of our latest products that we announced recently is based rollups and based sequencing. Puffer Unify is this introducing this new paradigm of rollups that is set to enhance user experience by bringing faster transactions, 200 millisecond transactions, and also solve for the liquidity fragmentation. That's why we believe the future of Ethereum is very bright, and that's our theme.
Hi, I'm Kratik from Renzo. Renzo's long-term goal is to make restaking as easy and accessible for everyone, like being the on-ramp and off-ramp for restaking for a regular user, right? So for a Renzo user, you don't have to choose, you don't have to make decisions as to whether you want to do, native ETH restaking, LSC restaking, which validators to use, which node operators to delegate to, which AVSs to secure. We abstract all of that and make sure you can get exposure to restaking from any L1, any L2, and get the rewards back to you without having to worry what's happening on the back.
Yeah, thank you. My first question would be target for our builders, Renzo, Puffer, and Outlayer. Obviously, in the risk-taking ecosystem, we have different stakeholders, including risk taker, can be seen as investors, and we have like asset manager to operate those assets in different AVSs, distributed system. And then we have like the client sides, who AVSs like Outlayer. And we'd love to note you guys what will your main value that you bring to the risk-taking ecosystem and the whole blockchain infrastructure. Maybe Kratik can start first.
I can go first with that one. We, in this 3-sided market that you mentioned, we believe the most valuable participants are stakers. They are bringing the most value. They're bringing this economic security that this entire ecosystem needs. They're even providing the economic security that Ethereum L1 needs through their liquid staking to Ethereum L1. So we really value these side of the market above all. But then we also prioritize developers that are building AVSs as well to have a very smooth onboarding to Puffer as an LRT. That's why our focus is designing these trustless, trust minimized connection between the stakers, between the operators, and also between the AVSs. Going down the permissionless and trustless path enables this much better innovation platform for any developer to come and develop their protocol. And of course, users can also participate in an LRT without having to really have many trust assumptions on a centralized entity or having reputation-based trust assumptions here. So that has been always our focus in designing this. Today, anybody can run an Ethereum validator on Puffer and also be able to walk away with restaking rewards as well. At the same time, for AVSs, we're enabling this very nice, safe platform that is compatible with their developments. For example, it is important as an AVS to know what class of collateral is protecting their AVS. Is it provided by a decentralized enough set of validators? Do they have anti-slashing active? So they wouldn't essentially be rugged if the slashing happens on the validator level. So these are like many important and complicated tasks that we had to design for to deliver, to take care of this three-sided market.
We are mostly on the AVS side of things. So we are the AVS builders. I mean, unlike most of the AVS builders where, let's say you are building a bridge as an AVS or building a chain link as an AVS, you mostly focus on one AVS in particular, right? We don't do it that way. Our model is very different because we don't have an alt layer AVS per se. What we do have is a suite and a family of AVSs that each one of them is dedicated to a certain rollup. So basically, we are in the business or in the area of spinning up AVSs for each rollup that we have. We also, by the way, do run operators for some of the partners, AVSs that we work with closely with, because we want to. First, we launch rollups, then we launch AVSs corresponding to those rollups, and then many of these rollups actually need external AVSs to use. So we also want to operate on those other AVSs as well. So we play this part of rollup builders, AVS builders, and then operators in three ways.
So, as much as I agree with with Amir here, is it's a three-sided marketplace and it's super complicated with several edge cases, like even let's say even operator AVS collusion being one of them that's been talked about a lot. Payments, slashing, edge slashing conditions. But let's face it, like where we are right now, restaking is not fully in production, right? We are in an experimental courtship period where users or restakers, operators, and AVSs are in a getting to know each other phase, right? Like they probably date, they might not date, they might get married, but right now they're all trying to like figure out how it feels like to work with each other right now, trying to get a sense of the three-sided marketplace. And this is what the goal has been for us at the moment. This is what the values and this is what our contribution has been, to enable a platform for institutional or even non-institutional node operators, for professional stakers, restakers, whales, fish, retail, doesn't matter, and even for AVSs to all come together and try to make restaking a reality. So when slashing is there and when payments are enabled, we all know what we signed up for, and we all know how it works and how we can all work together, right? Apart from that, on the user experience, like something that is not talked about very often is EigenLayer as a restaking service is building all the middleware, is building like, a lot of AVSs are middleware services like Order, Espresso, Hyperlane. Like these are all middleware services that are supposed to empower and make it easier for rollups to live, right? But the more successful restaking is, and the more successful these services are, the more we will suck the same TVL out of these rollups simply from high restaking yields on mainnet, right? If all of these services are successful, the best case scenario, then the yield on restaking is going to be so high that at the end of the day, the TVL will not remain on rollups because restaking is only possible on mainnet. All the collateral is on mainnet, right? So how do we solve this problem? How do we solve, like, sure, a rollup does want, a super professional data availability layer. They do want shared sequencer, etc. But at the end of the day, they also want users. They also want TVL. They also want user activity. So What I'm trying to say is like we're trying to help to bridge this gap, and we launched something called native ETH staking on L2s, where users on L2s can get exposure to restaking while preserving TVL on that very rollup, and while also securing the same services that this rollup is using. We do that in partnership with Hyperlane, with Connex, they're all here as well. But essentially, this is one of the things that we're trying to help make restaking as accessible as I said, and cater to the Ethereum rollup centric roadmap, and believe in the future that users will eventually come from rollups and L2s.
Yeah, but I want to follow up a question about from investment perspective, just target to Alex. I believe many of the audience today, they also have the like Ethereum or different assets or like BTC that can take part in the risk-taking economy. So what would be the main factors or main points that when you evaluate ARD protocols or evaluate AVSs to take part in their like token sellings. So what will be the main factors that you will consider about when you make the investment decision or provide liquidity for the protocol?
Got it. Yeah, I think that's quite it's an interesting question and has multiple facets. To it. First, like how we select, I guess, investment opportunities. There is a variety of ways to kind of look and cut this. One would be how you think about risk management. I think in crypto, people sometimes forget about that there is such a thing called risk, and it kind of like always comes back with the blow. So the risk reward function is always there. So the AVSs also have various types of risks, as well as the asset or the collateral or the assets that are used for the collateral. So all that package, like in terms of how each of the liquid restaking protocols are managing risk, is very important. If you want to have a bit more yield, but then you kind of are okay with taking a higher risk, that's fine. And contrary to that, if you're really like one of the very institutional, very conservative type of investor, and we're going to get a lot of capital allocators from the TradFi institutions now that ETF is coming along. A lot of them are actually filing their S1 amendments. They want to play in the liquid staking, liquid restaking for sure. So risk is actually a very important part for investors. For us, we're always looking at that from different angles. Looking at the team, the experience, obviously the technology stack, the aspect around the technologies is very important because wherever you have a lot of concentration of assets, there's a lot of interest to get some sort of exploit to get those access to those assets, and obviously, like I'd say, like lastly, probably the some of the valuation and the overall economics of an investment opportunity in LRT is also very important. I think this year has been very very interesting to see how this whole. I don't think we've matured yet, but earlier in the year, and I was on a similar panel at ETH Denver. I think that was pretty much when the entire restaking space was really heating up, and some of the valuations that we were seeing from like an investor perspective were not probably the most compelling. So if you really want to get kind of exposure to it, I would say like as an investor, you'd also want to pay attention to that among other factors.
Yeah, the question I want to ask for everyone right now is I think we talk a little bit more about risk management side and opportunity, but I believe that many of us still not familiar with the many concepts. I think it's still very new, because mainly because LRT already launched for around 6 months, and AVS is a lot of things are not settled down about slashing mechanisms, about how to stake the tokens with different like token economics. So I would love dive a little bit deeper. That from your perspective, whatever you are, LRT or AVS or investors, what will be your main expectation uh, for the benefits that you can get from this ecosystem, and what will be the main challenges, whatever technical challenge or commercial challenges or markets like sentiments. Would love to hear your thoughts about this. Maybe this is the main final question we have. Yeah.
So maybe I could take the first point on the AVS side, right? Because AVS builders have the first, I guess, the first point of contact in many ways, because when you are restaking or you are delegating your assets, you are expecting certain kind of rewards from the AVS, right? So when you talk about risk, you also have to talk about rewards. Unfortunately, at the moment, of course, EigenLayer is still being developed, and there are certain things that you can't do. You can't make, for example, today you can't make a choice on how much security you actually want, and you can specify that in the contract. It's not possible at the moment. So because of that, you have scenarios where you may have potentially really high TVL security in certain AVS, which may not necessarily need that much security, right? And so, in a way, we are also, a lot of people are talking about how much security you actually need. That's one question. But let's say you know how much security you need in some way. What do you do? What do you do next after that? Can you actually limit the security that you actually need to this? Unfortunately, you can't do that right now. Which means that now, once you have that much stake on your AVS, how do you reward them, right? And that's something that we have to think about in the coming months when the reward mechanism actually goes live. There might be shuffling that might happen. For example, end user, because the EigenLayer, AVS are designed with a very operator-centric kind of design, right? So which means that you, as a user, cannot go and pick and choose a certain AVS directly. You're kind of relying on an operator to choose AVS for you, right? So there will be some shuffling that will happen depending on what sort of rewards are being pushed out from the AVS. The second thing is, of course, slashing is not enabled, which is also a good thing in this moment because the whole system is on training wheels. But then when slashing actually triggers, you may categorize certain AVS as very risky, and other AVSs as not so risky. So people may tend towards, hey, I want to stake or delegate to an operator that only works with a certain kind of AVSs, right? So we'll have to see all those dynamics play out. So there are risks and challenges, which I think it'll be interesting to see how this shows up in the coming months.
Yeah, I think you actually touched on a lot of great points here, Amrit. But I would continue on that by saying yes, like slashing hasn't gone live. Once it's going to go live, this TVL that you see back in these AVSs are going to be completely reshuffled and redefined because now we have the risk live. Payments aren't live yet, of course, and we can't really measure risk-reward ratio right now, and that's going to be set to be revolutionized. What we think as Puffer is to actually design around what is needed as an LRT. Of course, we want to give the power back to the LRT holders rather than the operators in our designs. That's the way we design it. We have also decoupled our restaking operators from our Ethereum normal staking operators to actually de-risk this chance of collusion between a restaking operator and a staking operator as well. So there is a lot of design intricacies that went through Puffer to actually prepare us for when this slashing comes live, when the payments go live. There are other little things. There are many gas efficiencies today live on EigenLayer, including partial withdrawals from Ethereum. Many protocols are spending 90K, 100K per week right now to get the partial withdrawals, to just pay their Ethereum node operators. This is like a big thing that needs to be resolved. Also, there are other things that can improve EigenLayer. For example, partial delegations on EigenPods can really improve on the current existing stack. So I do agree, like I mentioned, this restaking enables a bright future for Ethereum, as well as what we're focusing on around rollups and other ecosystems that we're defining. But since we're in early days, there are yet still a lot to be developed on the infrastructure side, so we can ultimately improve the user experience.
Okay, so think there are three kinds of risks when you're securing AVSs, as regardless of whether you're an LRT or whether you're a regular eigenlayer, like an eigenlayer user who's directly restaking with eigenlayer. So it's, as you said, slashing risk of AVSs. Every AVS has certain slashing conditions dependent on the architecture, dependent on how the AVS is built. Some AVSs might not even have slashing, right? Like Solana already does now. Like if a Solana want to build on eigenlayer, they wouldn't want to have slashing, right? B is operators. This is neither in the control of AVS or the LRT, but rather the individual operators themselves. Like, right, operator can collude amongst each other. Operators can try to be malicious. Operators may not behave the way that they're supposed to be behaved. And the third is the liquidity risk, right? When I'm securing AVSs as a user and I'm getting reward tokens, and these reward tokens have $10 of liquidity and $1 million in APY every year, then it's simply not a good RR for me to secure this AVS, right? And third is probably most underlooked upon, primarily because of what you guys said, is like, we're still in our training wheels period, so we don't have payments, so we are not yet to see this. But these three risks are primarily what how I would look at personally about as a restaker if I were to summarize risks of the overall ecosystem. Now there are various ways to objectively quantify each of these risks. Slashing risk can be objectively, it could be what's the maximum value that you can lose securing every AVS, right? If an AVS has 1% downtime, let's say 7% double signing, then the maximum that I'm losing here is 7%, right? Over time, as we have enough slashing data, maybe 5 years, maybe 10 years down the line, we can come with a realistic number as to what's the expected value that can be slashed at any given point of time, given these are the node operators, given these are the users, etc. So, and liquidity risk, I think like we've had, DeFi is at a point where we are mature enough to properly quantify liquidity risk. We're probably not mature enough to quantify liquidity risk during black swans, which I think there's still some work that needs to be done. But where we are at right now, I think we are partnering up with some third parties like Gauntlet, like Chaos. Like, we have risk managers who can accurately or, practically estimate liquidity risk and offer these recommendations to restakers. So you don't end up like, doing something that could just wreck your users at the end of the day and even like manipulate token price at the end of the day.
And just to wrap up, I think I have nothing more to add. Really holistic insights on the risk side. But I think since our panel is actually called DeFi and LRT, I'd like to address the DeFi part. Once all of those parts come up online and the risk actually starts being real, it's going to be very interesting to see all of the protocols and projects that will come and build on top of you guys or alongside you guys. So that's where the DeFi part actually really starts flourishing, because what DeFi does is really like taking the infrastructure layer and then ramping it up, and then maybe layering another part of another like risk, which that's how we get even more yield. And we'll get to a point where the LRT space becomes so exciting and interesting. And I think that will probably come later this year or next year, that will be very looking very closely for new innovative applications using the LRT as a kind of infrastructure layer for DeFi applications and new use cases that can be built on top of them. So as an investor, we're very excited. And yeah, thanks a lot for sharing your insights.
Since we ran off the time, thanks for insights. If you have more questions, feel free to connect to our guests. Thank you.
Thank you.
Thank you.